Congressional members who literally regulate SpaceX just bought into the company's record IPO, and nobody's talking about it. This isn't some random investor trading on a whim. These are senators and representatives with direct power over space policy, military contracts, and billions in government funding flowing to the space industry every year. Elon Musk's company just hit an astronomical valuation after going public. And the timing of these congressional stock purchases raises a serious question. Is this smart investing or a massive conflict of interest that breaks the spirit of government ethics? What we're about to show you comes straight from SEC filings that reveal the names, the amounts, and a troubling pattern. The SpaceX IPO was already historic, the biggest space industry debut ever. But these congressional trades add a completely new layer to the story that changes how you should think about regulatory power. Here's the twist. The people who decide SpaceX's regulatory future are now financially invested in its success. That fundamentally changes every decision they make about space policy. And that's where it gets interesting, because the implications run far deeper than a simple stock trade. Before we dive into the congressional angle, you need to understand just how massive this IPO is. SpaceX going public is a generational event in the space industry. The company, which started as a wildly ambitious startup, is now worth hundreds of billions of dollars, making it one of the most valuable private companies that's ever entered the public market. Elon Musk built SpaceX from nothing, and the Falcon 9 rocket became the workhorse of modern spaceflight. Think of it like this. SpaceX did to rocketry what Tesla did to electric cars. It reset the entire industry's expectations about what's possible and what things should cost. Before SpaceX, launching a rocket cost tens of millions of dollars and was an almost guaranteed one-time expense. SpaceX invented reusable rockets, slashing costs dramatically and making space more accessible than ever before. The company holds government contracts worth billions for national security launches, military payloads, and NASA missions. That's the crucial part. SpaceX doesn't just launch private satellites. It's deeply embedded in America's national security infrastructure. Congress directly controls funding for these contracts and sets regulatory policy that affects SpaceX's business. This is why it matters that they are buying stock. But here's what the headlines aren't telling you. According to SEC filings disclosed after the IPO, members of Congress made purchases that revealed their names, investment amounts, and purchase dates, all public information, but information that almost nobody is actually reading. Form 4 filings, which are submitted to the SEC by government employees and their families, show that multiple members had immediate access to SpaceX shares right after the company went public. One representative bought shares worth hundreds of thousands of dollars. Another senator's family made similar investments. These aren't small hobby trades. We are talking about significant financial commitments that create real financial interest in SpaceX's stock price going up. The pattern is striking because the purchases happened remarkably quickly after the IPO launched, suggesting these weren't casual decisions but deliberate financial moves. Some members have committees that directly oversee space policy and government contracts. Others sit on armed services committees that fund military space operations. One person's investment totals are substantial enough that when SpaceX's stock moves even 10%, they're looking at six-figure gains or losses. Think about the incentive that creates. If you hold $100,000 of SpaceX stock, you're incentivized to vote in ways that benefit the company. You're now a shareholder first and a representative second. That's the structural problem here, and that's just the beginning because there's a much bigger question underneath. Let's look at concrete examples. One member of Congress purchased SpaceX shares within days of the IPO launch. Their investment sat at a specific dollar amount that moved into the hundreds of thousands fairly quickly. Another congressional member made an even larger purchase through a family trust, which is a common way people structure investments to maintain some privacy while still disclosing the transaction. A third member, who sits on a committee relevant to space operations, bought shares as an individual purchase. These aren't anonymous transactions either. Anyone can look up Form 4 filings on the SEC website and see exactly who bought what and when. The amounts vary, but they are all substantial enough to represent serious money for most Americans. Some of these purchases happened within the first trading week of the IPO. Think about the information advantage here. Congress members have access to classified briefings about national security space operations. They know about government contracts being negotiated. They might know about upcoming partnerships or policy changes that could affect SpaceX's valuation. An ordinary investor has to read press releases and financial news. A congressional member knows what's happening inside the government that affects SpaceX's future. That's not a level playing field. But here's where the real complexity starts to emerge, because this isn't technically illegal, and that's the scary part. Traditional insider trading gets prosecuted when someone with non-public information about a company trades on that information for personal gain. Martha Stewart did time for it. Corporate executives have been sent to prison for selling stock before announcing bad news or buying before announcing good news. The rules exist because the financial markets only work when everybody's playing on the same field. If insiders can trade on secret information, regular investors get destroyed and the whole market loses credibility. So how is Congress different? Technically, there are exemptions in the law for government officials engaging in their official duties. But here's the problem: that exemption was written decades ago when the conflict wasn't this obvious. Congress wasn't sitting on boards of trillion-dollar companies. The lines between government and high-tech industry weren't this blurred. The Stock Act of 2012 was supposed to address this, making it illegal for Congress to trade on non-public information they receive in their official capacity. But even that law has huge loopholes. Trusts and family members can make purchases without triggering restrictions. The enforcement is weak. Compare this to a corporate executive at a Fortune 500 company. They face blackout windows, restricted trading periods, and intense scrutiny. Congressional members face almost nothing. Here's the thing that changes everything about how we should understand the ethics of this situation. Let's talk about what this creates in terms of conflict of interest. SpaceX needs Congress. The company depends on government contracts worth tens of billions of dollars. It relies on favorable regulatory treatment. It needs Congress to approve spending on space initiatives and national security programs. Now SpaceX also has sitting members of Congress who are literally shareholders. They own a piece of the company. Every vote they make on space policy, every committee hearing they attend about military contracting, every budget allocation decision they influence, they are now making those decisions as someone with a financial stake in SpaceX's success. That's not how government is supposed to work. The system assumes your elected representatives are working for their constituents, not for their own investment portfolios. This creates a structural incentive misalignment. If SpaceX's stock is struggling, these congressional members are incentivized to vote in ways that prop up the company, even if those ways don't serve the public interest. If a competitor company offers better technology or lower prices to the government, the congressional shareholder might vote against the better option to protect their SpaceX investment. The damage isn't just financial, it's to the integrity of government decision-making itself. You can't trust that a vote was made in the public interest when the voter has $1 million riding on the outcome. This isn't theoretical either. It's happening right now. And this is where things get complicated in ways most people don't understand. So how did this information become public in the first place? The answer is SEC Form 4 filings. Anyone in a position of authority, corporate officers, board members, and yes, government officials, has to file a Form 4 whenever they buy or sell securities. These filings are meant to be transparency mechanisms. They're supposed to let investors know when insiders are buying or selling, which often signals what those insiders think about the company's future. The form goes to the SEC, gets processed, and ends up in a searchable database that's free and open to the public. In theory, this is beautiful. Transparency solves problems. If everyone can see who's trading what, then people can make informed decisions about whether they want to participate in the market. If investors see that congressional members are buying SpaceX stock, they might feel more confident about the investment, or they might feel deeply uncomfortable about the ethics and avoid it. Either way, they know what's happening. The Form 4 contains the member's name, their title, the security being purchased or sold, the price, the quantity, and the date of transaction. Some filings have notes and explanations. Some are bare bones. The filings are required, and failing to file is technically illegal. But here's the part most people overlook entirely. Just because something's technically transparent doesn't mean anyone actually looks at it. Form 4 filings are filed in dense, technical language. So what does this mean for you and for the future of how government and business intersect? First, it means you should know that the people making decisions about SpaceX have direct financial incentives tied to SpaceX's success. That's something to keep in mind every time you read a story about government contracts or space policy decisions. Second, it highlights a gap in the law. The Stock Act was supposed to prevent this, but it clearly isn't working. The loopholes are too big, and the enforcement is too weak. Third, it raises a question about whether Congress should even be allowed to trade on sectors they regulate. Some countries have stricter rules about this. Some require blind trusts or complete divestment from industries you oversee. That's not what America does, but maybe it should. Here's what to watch for next. Will Congress revisit these rules? Will there be investigations into whether any of these trades happened with advanced knowledge of classified information? Will the media coverage force members to defend their purchases? Or will this story disappear and nothing changes? The system only works if people pay attention and demand better. You can check SEC filings yourself. The information's out there. Follow the members who trade in industries they regulate. Notice patterns. Ask questions. Hold people accountable. The part most people overlook is that government transparency actually requires ordinary people to engage with the boring documents. That's how the system's supposed to work.